Bloomberg Audio Studios. Podcasts, radio, news.
Single best idea, my last of the year. Thank you so much for the support. This has just been a little thing we've pulled out there. I figure people are listening to Odd Lots and Everybody's Business and all our wonderful podcasts. They're 15, 20 minutes long. And the goal here was just a little vignette that you can throw in and listen to when the mood strikes. Our mood was to go for better conversation, longer conversation with smarter people, and to have back-to-back Stephen Major and Jim Caron. Major now from HSBC and legendary. Jim Caron called him the James Bond of fixed income. Stephen Major now at Tradition, based out of Dubai. We celebrate that new set of duties for Mr. Major. And then Jim Caron, iconic at Morgan Stanley, back-to-back. That's the way we finish the year strong. Here's Stephen Major, and you need to look at the 5-year yield.
If you want one number on the curve, it's probably 5 to 30 year. You can ask Jim next, send him my regards, but Jim will have an idea as well. I think 2s, 10s can be quite distorted because 2s is about the Fed. It's as simple as that. 2s is not a credit risk story. It's not a sovereign risk story. It's not about auctions or anything really. 2s is safe. 2s is about the Fed. 10s starts to be a bit more cyclical, a bit more about the data, and looking into longer term sort of trends. I think 5s, 30s is your best measure of the curve because you're capturing something that is close to where the Fed is and sensitive to rates, but not quite as sensitive as 2s. And I think it captures the whole story. 530s.
Stephen Major of Tradition, he was really good. I asked him about Dubai, and I just said, it's like a new Dubai. And he was adamant. I've been to Dubai 4 or 5 times, and, you know, it was early in the boom, if you will, and it was a little shaky. And he says that's really gone. It's really captured a destination city much more than in previous decades. Stephen Major from Dubai with Tradition. On to Jim Caron at Morgan Stanley. Yes, out with an outlook. But Jim Caron here on the fears we hold in fixed income.
Default risks are relatively low. We're not really seeing a material widening of default risks or increase in default risks. Interest rates, while they may drift a little bit higher in the back end, they don't seem like they're moving out of control. They might go a little higher, but certainly not to levels that I think will destroy the equity markets. So I think 2026, at least from the bond market's perspective, I don't think the bond market's going to get in the way of equities.
Jim Caron of Morgan Stanley. We're out on podcasts, on Apple, on Spotify, on YouTube podcasts. It's Single Best Idea.